basically Walmart is a major convenience store that is like Best Buy and Target and the numerous other stores combined. They sell so many products. You can list a product like on their website, and then you can sell it in their store, and they'll accept that if it does meet their requirements, of course. But what's so great is this company is basically Amazon but physical. And so what you could do is, if you find a great product that you want to buy on their Walmart's website, you can go to the Walmart store or any Walmart store, and they'll likely have that item if it is a popular item. And so you can check it out, pick out which one you want. You can ask an employee about it. And so you can really do a bunch with Walmart being more in person and more physical. And so this is what Walmart really succeeds at. You can buy this product, you can return the product if you don't like it. And so, unfortunately, what's great is, even though Amazon allows you to return things very hassle-free, Walmart is a physical brand that is in store. And so what you can do is you can literally just buy the item and then return it at the store that you buy it from. And so if you have any problems, you can ask Walmart as well for help. And it's better if you're more interested in physically seeing the item before you buy it. And so this is why I like Walmart more than Amazon currently. And especially, we're going to talk about the valuation of the company. But basically, we like Walmart currently for the valuation, also for its ability to be able to buy products in person. Now, what's coming up currently is at least Black Friday. Now, if you're watching this video much later than that, then, that is what it is. But, like, Black Friday has been very successful for Walmart for numerous years, as you can buy many products for a discount around in Walmart. And so what's great about Walmart is they sell food, they sell car parts, they sell numerous things at a normally a very big discount. And so they're really great doing this. So you can buy your food from Walmart and know that you're getting a very good price. And so you can actually go to Walmart for basically everything. And so if you get their membership, which we'll talk about in a second, you can actually save yourself a bunch of money by getting their 5% cashback card. And then you can go and you can buy things such as things on Black Friday. You can buy your food from Walmart. You can buy numerous products from Walmart. And you don't have to go to really any other store. And so this is why Walmart succeeds over numerous other companies such as Best Buy. Now, another thing I'd like to quickly talk about would be the Walmart Plus program that they offer currently. And so what's really neat is Amazon Prime has been released a bit ago. And so for $120 a year, you can get basically unlimited access to free shipping on Amazon. And so it's for specific products, but normally you can get 2-day shipping on these items. And so it's great because Amazon will allow you to do that if you get their membership. And then you also get access to numerous other things such as Prime videos on the Amazon Fire Stick and numerous other things. But Walmart offers another product for $98 a year. And what they allow you to do is they give you things like fuel discounts. They give you, as well, by the way, the unlimited free delivery. But they also give you the ability to use like their Walmart app, stuff like that. They let you use the Walmart Pay, and so it's great because they're providing basically a service that would be competitive with Amazon Prime. So if you're just looking at Amazon Prime and you're saying this is why Amazon is going to be much more successful than Walmart, you have to sort of think that Walmart also has a product that is doing very well currently. And so even though it may not be necessarily like Prime, it is still a product that is very competitive with Amazon Prime, and this is something that we could take into account over our long-term analysis. Alright, so now that we've talked about the company, let's talk about the valuation of the company currently. So we could see that the intrinsic value of the company is about $85.50 a share. Now, if you're wondering what the intrinsic value of a company actually means, it's basically the value that the company should be trading at in the future. And so it's basically a value that you should be heading towards in the future, and it takes into account the growth, it takes into account the earnings, and it takes into account the actual book value or the asset worth of the shares of the company. And so this is why intrinsic value is so important, and this is what one of Warren Buffett's major indicators of whether or not you should buy a stock. And so it's basically a valuation indicator. And so the companies, likely like a lot of these companies like Walmart, if they're large, they may trade over their intrinsic value, which is understandable currently. But this is something to take note of, in that the company is at least trading relatively close to its intrinsic value. Now, if we take a look at Amazon, for example, we can see that they trade about $3,162 a share currently. We can see that their projected, or their intrinsic value currently is about $490 a share, which makes the company well overvalued compared to Walmart. So if you're looking at Walmart from a value standpoint, you might be more inclined to buy Walmart stock compared to Amazon currently. Now, we're also going to talk about Walmart's dividend and Walmart's P ratio, which also happens to be better than Amazon as well. And so we're going to get to that very soon. Another thing I want to talk about is the consistent growth of the book value per share of Walmart. So this is basically the asset worth of the company. What they do is they take the shareholder equity, which is basically the asset worth of your shares, and then you divide that by the number of outstanding shares in the market, for this company at least. And so you can find the shares outstanding of this company on numerous websites, but Yahoo Finance offers it as well, and you can see that they have 2.83 billion shares outstanding. Now, this number decreases as time goes on, as long as the company continues to buy its shares, which will increase the value of your shares. And so this company has been consistently buying back its own stock, which is very important. So about 2 years ago, the company issued once again another stock buyback program. We could see that they were interested in buying about $20 billion worth of stock over the next 2 years, basically. This was announced back in 2017, by the way. So this would have been definitely over 2 years. And so the idea of this is to basically continue to buy back its own stock to increase the value of your shares. And so that's what's so cool about Walmart. They pay a great dividend, and then they continuously artificially produce more and more value for your stock. And the company will likely trend upwards in trading value as a result of the book value increasing. That's why we talk about this, because the goal is to sell your shares for more, of course. And so with the value of the shares artificially increasing as Walmart buys back lots of its stock, the company will likely do well in the long term as it continuously gains the money to be able to increase its stock buybacks over time. Now, if you're wondering if this company has increased in terms of earnings recently due to the fact of the pandemic, you would be absolutely right in thinking that. This company is definitely increased in earnings, and that's why the stock price has certainly risen recently. And so we could see in terms of the actual revenue of the company, we'll talk about net income, which is the profit, in a second. Basically, their revenue, the money that they brought in, has basically been increasing over time. We can see it went from 127 billion in September, and then we can see this is, by the way, 2020. And then you can see in December they went to about $141 billion, which is about an earnings per share of $1.45. Now, this is great for Walmart because it shows that Walmart can handle a pandemic. Now, not a lot of stocks can say that they can handle a pandemic very well, and this is where Walmart succeeds. And that's why I think Walmart is almost a pandemic-proof stock, which would provide it a safe investment over the long term. As if there's a recession or there's anything like that, people still need to buy food, and people still need to be able to buy products such as things like from Walmart. And so that's why Walmart has done so well currently. Now, we can even talk about the net income, which is even more noticeable. And this is basically taking into account after paying workers, after paying bills, fees, anything like that. We can see that the company has brought in about $15 billion a year consistently. Even though this dipped recently, at least back in 2018 or 2019, the net income has recently increased up to about $18 billion over the year, and this has been very important. This means that the net income, which is the net profit of the company, the money that they actually make, was about $18 billion. And so with the $20 billion in buybacks, they still have plenty of money to invest in other things, so they have the cash on hand. We can take a look to their cash on hand. They have about $17 billion in cash on hand. And they also will have enough money to pay down their debt as time goes on, which will increase the value of your shares because the shareholder equity is increased because the shareholder equity takes into account the debt. So the book value will increase, thus increasing your share value. Now, I also want to talk about the actual debt of the company, which is also very important. Now they have been paying down this debt recently, ever since they did increase it by about 15 billion back in about 2018. And so this was towards the beginning of 2018. Their shareholder equity did dip over that period, but it still remains strong because the shareholder equity, their assets that they buy after taking off this debt have consistently been strong. They are hopefully appreciating assets, and they have definitely been clearly showing that they are strong assets and that they are worth more. And so as the company gains more and more net worth, your shares will increase in value. Now the shareholder equity hasn't increased recently a lot, which is unfortunate for the company. However, I would expect this to start increasing over the long term as their net income has increased. With the net income increasing, the shareholder equity takes into account the cash on hand, which means that the cash on hand will increase, the shareholder equity will increase, and as a result, the value of your shares will increase, and as a result, your company or the stock will be worth more and will be trading at likely a higher value. Now, the last thing I want to talk about is the dividend growth of this company. The dividend growth of this company has been consistent for many, many years. We can see that they've consistently raised their dividend as they've made more and more money. And so this is important. This means that the company is truly caring about its shareholders, and it is providing a solid return despite what the stock returns in terms of capital gains. And so we can see that the dividend yield was about 1.52%, but if the company falls in value, this yield will increase, despite whether they change the actual quarterly payout of their dividend. And so it's at 54 cents a share currently, which gives you an annual dividend of about $2.16 a share, which is phenomenal for any company, especially Walmart. And so Walmart is doing great in terms of paying out a good dividend, buying back its own stock, and not being tremendously overvalued. And this is why Walmart has been able to gather numerous investors over time. Now, the last thing I want to talk about is the price to earnings ratio. Now, if you aren't aware of what the PE ratio is of a company, it's basically the price that people are willing to pay in order to buy the stock. And so, based off of the earnings, I mean. And so, when the earnings increase and the price stays the same, the PE ratio will definitely will get lower as the earnings are increasing. But if the price increases with the earnings, the PE ratio is stable. And so what's important is that as the company increases in earnings, the PE ratio will likely stay stable. However, recently, since the pandemic has spurred a lot of investor growth, the Walmart stock has certainly rallied recently, and as a result, their PE ratio has risen substantially. The PE ratio currently, right now, is about 22, and so we can see that with the PE ratio being about 22, and looking at its previous history, we can see that the P ratio is about 10 or about 12. In previous years, this goes back to 2015 and then back to 2000. You could even see back to 2006 when this chart begins. You can see a P ratio of about 13, and then it went down to 12, and etc. It's sort of, that's where Walmart tends to trade at. So if you're concerned about whether the company is a value stock, I wouldn't consider this company more of a value stock. I consider it more of a growth stock. All right, so what are our thoughts on this company? Basically, in terms of the valuation of this company, we do think that this company is a tad overvalued, but this is just part of the industry. The industry tends to remain at these kind of levels. And so this is understandable for Walmart, and so I wouldn't necessarily be too bothered by that currently. Now, if you're buying this for the long term,